Good morning. It's 5:55 a.m. Eastern Standard Time, Friday, June 28th, 2019. Let's take a look at Litecoin. All right, people. I know I've been talking to people about one, two up and down. It seems to work. Let me refresh. I've been telling people, if you go check my last videos, I've noticed that we're getting two waves up and then a retraction down to the first wave. But this one took a rather long time. The proper TNA name for that, I two two steps up, one step back. Okay, that's for the layman. What they call this is an A, B, C wave, and that's the way it seems that we're going up. A, B, C wave down to the bottom. A, B, C wave down to the bottom. Where the C wave actually ends is at the lowest price after this B wave, which would probably, I guess, down here. But this one was an extended A, B, C wave. Okay? This is over a long period of time, plus the RSI is very low. So what I suspect is this wave is going to, which went down really hard, is going to go up really hard because look how low the RSI is. We plunged to. And now we're just starting to come up and we're at like 117, and we just touched the bottom 30 RSI. We got a lot of room to go up. So let's see. Let's go to the past, since this is an ABC wave. Let's look at the past. ABC. Right? I guess the C wave would end it right about here. Okay. So it's going to definitely go back. The first wave is going to go back. This first wave the A wave that's going to come up here is definitely going to go up to the top of this wave. Okay? That's what always happens on the ABC wave. The first wave tops out. This A wave here with the crosses on tops out at the last previous B wave. This A wave is going to top out at the B wave. Okay, people? See that? Now you could swing trade this and estimate by the number of increase of blocks. I call these lines here blocks. You count them. 1, 2, 3, 4, 5, 6, 7. We'll say 7. We go to the last one. 1, 2, 3, 4, 5, 6, 7, 8. We got 9 blocks. So I'm going to say between 7 and 8. Let's see this one. 1, 2, 3, 4, 5, 6, 7. 7.5. So I guess I would say $45. But since this wave is down so hard, it might be 50. It might even be more. So the ABC wave, or 2 steps up, 1 step back, seems to work. Even though this was for an overextended B wave before it went down to the C wave, which is the bottom. See, the bottom of the A wave. It usually is where the C wave taps out. Okay? See what I'm seeing, people? I mean, what you probably could do, now this is in my opinion, okay? You ride this up, but you see these waves, they shouldn't have been here. You should have went down to the C wave, but for some reason it stood for an extended period of time. So you could swing trade, but if you want to maximize your profit, you might want to do the riskier day trades, you see, because before it went to the new A wave from the old B wave, You had days where you can actually do a couple of day trades, you know, a couple of other trades in between. And it looks like you could probably get a couple of, one or two day trades in here. You know, one or two trades along the way. So while you're waiting, you might be able to squeeze out. It looks like you'd be able to squeeze out two trades between the old B wave and the new A wave. You might be able to squeeze out two additional trades, right? Between the B and the new A, you might be able to squeeze two trades, right? A, B, squeeze out two more trades, right? You would buy over here, sell over here, take profit. So you know you're going to see at least some tails where they're going to try to push it down after the B wave. Grab something up on these tails. You see them forming here on these red candlesticks, inverse candlesticks. Jump in here, sell off at least once, do it again, sell off at least here. You know, I'm just saying if you want to maximize potential, unless you just want to swing trade the waves, ride the wave. You might be able to get a couple of additional trades on its way to the C wave. See, you can get these two here. It seems like you can make two. One, at least two. At least between the old B wave and the new A wave, you can make an additional two trades. Plus you go in, when it dives down to the C wave, you want to be prepared for that. But it looks like to be prepared for that, you can get away with two short-term swing trades before your long-term swing trade. How's that sound? You manage two short-term swing trades and one large term trade. And if you use it, you see this is what you do. Okay, this is a strategy. This is my strategy, in my opinion. You put into, once you see you're at the top, you sell out at the top of the new B wave. Now you know there's going to be C wave. This is the one that goes down, that corrects down to the bottom of the first A wave. You got that? During that term when you're waiting for the new C wave to buy back in, you can use your money's maximum potential. So you wait until it hits. You know it's going to at least take an additional two smaller swing trades you can put in here before you get to the new C wave. So if you play your cards right and you pay attention, you can make this, catch the swing trade, which in this case, let's see. Let's do the math. This is my opinion, remember. Do not go out and trade based on my opinion. Go and do your own. I'm just sharing this with you to help you out. Don't blame me if this thing doesn't work out for you. Okay, we're going to say you start off with $10,000. Right? You came in and bought over here. You see at what's this? We'll say you bought in at 100. Just at the bottom of this previous wave. You divide it by 100. Of course, you got 100 coins. Then you realize A wave, B wave. You might have sold over here at 127. We'll say you sold out. You got lucky. You sold that over here. 137. So now your profit is 3,700 off your 10,000 you put in. Now you catch these two increases. You bought in at, you see at the bottom here of this little wave. You see, we got an additional attachment to the B. We'll call this the B wave, but the bulls were strong, so we got an additional attachment to the B wave. So you seen it go down here. You bought back in at 125. Now you got about 110 coin. So now you write this sucker up. Now you know you gotta, it's gonna go back to the top of this wave if you follow the wave theory. So you sold it times this, you sold now at 138. Now you just made altogether, since you started out here, you made from 10,000, now you got 15,000. So now you sold over here. So now you know it's gonna probably, you're gonna get two trades. It's gonna go back to the bottom of this wave, which you did. Okay? So you put your trade somewhere between here and here, and you usually get it. So let's say you bought, you're paying attention now. We'll say 130. Now you divide it by 130. Now you got 116 coin. Now you're looking to dump these. So again, let's just take a look to make sure. 1, 2. You're looking to dump these, and you know there's enough. You know there's usually two waves you could squeeze out here. And if you just bought here at 130. So on average, we'll take a look just to be on the safe. How many blocks? 1, 2. 1, 2. So to be safe, you know you can ride these waves for $10. So now you sell these at 140. Now you got 16,000. You stop. You got your two smaller swing trades in. All right. They went up one. We'll say 1, 2. But always play it. I would play it at 2 blocks just to make sure you get the money. You know, so you're not stuck in a trade. You see, I got stuck in the trade over here because I got overzealous of how high it was going to go. I thought it was going to go up to 150. That's how I made my mistake. But now I can fix that because now we're at the bottom of the C wave and I expect it to go up 2 waves. I will still manage to take profit because I did not panic and sell off. You can even have, if you are on Binance, you can even have caught that trade here. Okay, now it retracts to the C wave. What happens? You go to the bottom of the first A wave. You would have bought in here at 111, right? Now you have 147 coin. See, if you would have followed the waves the way I say, then you ride these. You expect when it hits the top, you got 2 smaller, on average, 2 smaller swing trade opportunities. So you got to count the blocks. 1, 2, 3. Okay, you see? But then what happens? It goes up 1, 2. Then what happens? It goes down 1, 2. What happens after that? It goes up 1, 2, 3. So it's in this case the smaller waves are 3 down, 2 up. Okay, but you want to close off, keep track of how many smaller swing trades you made. After you finish the second one, cut it off, get ready for the C wave to come down to. Now let's see over here. It hits the top, it goes down. We'll say 1, 2, 3. Just to be safe, and it's going to go back up to 1, 2. You see the pattern here? Then it goes 1, 2, down 3 waves, down 3 blocks. That would be your second swing trade. You're out. Right? You're out. You can be out. You're not going to make much off of that. It's tight. Oh. You would have sold here, bought back in here, sold here, bought back in around here, and you would have been prepared for the 1, 2. You would have second wave. I'm sorry. You would have sold here. Then you would have bought back in here, sold here. You see, it's risky to catch how many waves on the smaller swing trades you can catch. I would say to be on the safe side, try to get one smaller swing trade in to be on the safe side. Be cautionary. You could be adventurous and try for 2. In this case, you would have gotten 2. But looking at the market, the opportunity of how many waves you can catch between the smallest waves between the A, B, and C wave, you could possibly catch 1 or 2. But it looks on average you can catch 1. You can catch 1. You can at least catch 1 wave. So if you want to play cautionary, trading is risky whatsoever, but there's levels of risk. If you're a cautious trader and you're looking at this and you're seeing that this constant ABC waves are constantly running through here, but between the B wave and the C wave, you can do a couple of smaller swing trades. I would do one smaller swing trade to not take too much risk of being stuck in a trade, right? You do your small swing trade. You would have sold out here. You would have counted blocks. 1, 2, 3, 4, 5, 6, 7, 8. Okay. So now you're gonna sell off when you get a $40 to $45 increase, and then you're gonna be looking for that first mini wave down, which is 3 blocks down. 1, 2, 3. Okay. It's a little back into, you can go here. You buy in. Now you know it's going to go back up 2 blocks. 1, 2, you sell off. And that's it. When you sell off, you put your buy in at the bottom, somewhere along here. Okay? And if you have a stepped B wave, I'm going to call this a stepped B wave, then you know that you're going to get additional waves out of it. Okay? And on average, you can see 1, 2, 3, 4, 5, 6, 7, 8. You're going to get 8 blocks of $5 up. 1, 2, 3, 4, 5, 6, 7. Close to 8, but we'll say 7. Each wave is gaining more. 1, 2, 3, 4, 5, 6, 7. We'll say 7. We'll say 6, 7, 8. Right? They're adding on an extra $5 on each. 1, 2, 3, 4, 5, 6, 7, 8. So now this one, you could safely say this is going to go up to $45. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, $150. So now if you would catch this wave, you would have $22,000 following the ABC wave. If you would have started at the beginning of this wave here. Let me just check my chart, calculator to see if that's where it started. So this is how I'm learning to be a better trader. So far, I've made mistakes, right? But I recovered from all of them by just waiting it out, okay? That's the learning process. If I want to run off and sell off, I put in there what I can afford to lose, right? Now with my patience, I waited long times in some cases. With my patience, I've always made my money back. True patience. If you're gonna do it, to leave that money locked up. In other words, you would. If a lot of people leave their money in the bank long term, I just left it in coin, and then sooner or later, you make it back. You just gotta have patience. Now, now that I'm in the process of learning to become a better trader, and I learned these A, B, C waves. Okay, even during a big dump, A, B, C, it still works. The ABC wave. So what you can do now is ride this out as a swing trade and try to squeeze in an additional trade of one smaller 3-to-2 ratio trade. 3 blocks down, 2 blocks up. And then you could be adventurous if it's a step trade and try to get another one. If it's a stepped B wave, to try to get another trade in there. After you sell out the 2 block, you can see it's a step trade. It's going to come down to the bottom of the step, which it does. Grab it and sell it on the last top. Okay? I would have sold it here at 143. Okay? That's without being here. You just program it in. You get a step wave. But we have to see this step wave if this theory is true too. If we get an extra step in the B wave, can we play that out? Can we expect to get 2 smaller swing trades in there? But if you don't want to risk that, because that is kind of risky trying to catch these other smaller waves, you can just do the A, B wave, and then get ready, sell at the top of the B, and then get ready for the buy at the bottom of the C wave, which is usually over here. The last A wave, you see, and put your sale in at the top. After you sell out here, put your sale in the near future. In this case, you would have waited 2 weeks, but would it be worth it? Yes, because you're going to nail probably from $10,000 around $3,000. So I'm learning to be a better trader. This is my own analysis. This is why these guys are insistent on you doing your own analysis, because everybody sees. You can look at the same painting, but everybody's going to see something different. Okay, and what we're looking at here is Picasso. Okay, and you're looking at it from a different angle. You're looking at it through your own unique perspective. So you have to develop what works for you. Okay, you're not gonna see the same thing I see in the mirror. Okay, why? Because you're a unique character. So you have your own unique perspective, and you got to use that perspective to teach yourself the signals that work for you. That's the best way I can explain it. So now I'll probably, now what I've learned, like today, I learned on my own without learning the technical names for this. I would say I was using it's 2 steps up, 1 step down, right? But there is a name for this. I looked at the technical analysis. I said, let me see. I know there's a name for this. and it's an A, B, C wave. All right. Most of these guys will tell you it's 5 waves. 1, 2, 3, 4, 5. I see a lot of confusion exactly where these 5 waves are. So I like to simplify it and call it an A, B, C wave. And even if you sold off here and you waited for this new C wave, you would still make good money. You would still probably pull $2,000 off of this with 10 grand. So now let's see. We're gonna ride this wave up. I'm gonna totally close out my positions. I'm gonna take my profit, send that to the bank, and then I'm gonna sit here after it hits the top of the B wave. I'm gonna sit here and wait for the next one, like a little predator, waiting for the bird to fly in front of me, and then I'm gonna jump on it. I'm not gonna move, because that's the mistake. You get emotional, you start doing knee-jerk reactions, and you're gonna lose money. If you stick to the plan and you don't have a weak hand, you'll win. It's just a matter of waiting over here. They made you wait 14 days to get to the C wave. I don't know if a lot of people want to wait for that. They want their millions yesterday. So now we learned the ABC wave. A, B, C. A, completion. A begins, A ends. B wave. B wave begins, B ends. Sell. You might be able to get a smaller trade in between. At least one wave. 3 blocks down, 2 up. That seems to be the average. Put in your buy-in for this. If it's a stepped wave, here's what you deal with. 3 down, 2 up. Stay liquid. Wait for your C wave. Buy in. How do you know you're at the C wave, the bottom of the C wave? It usually ends up being at the bottom of the A wave. You see right there? It's simple. It can't get any more simpler. All right? So that's, even though we seem to say, everybody's saying a large retraction. No, I see a normal retraction. I don't see anything different. If you're following the ABC wave, it's just totally normal for it to go back to the A wave. The only thing is that a lot of people have a misunderstanding is that we actually had a higher increase. We seem to gain like maybe another $5 increase from the previous set of waves. So it seemed like we were falling. It's all an illusion. That's what it seems like to me. I think a lot of people are panicking. The thing works simple. I think a lot of people are inserting emotion. It's working in a simple form factor, an ABC wave technique. It's working. It's a simple form. What the problem is, you got everybody focusing on this and this, these red waves. You're looking here, but you're forgetting about all this other information that's telling you where it's going. Okay, you're panicking. Oh, we don't know where it's going to go. We don't know how low. We don't know how it's going to plunge. Following these ABC waves, it seems pretty much written in the scrolls of where it's going. You see? And if you're a smart trader and you see your opportunities, and you can recognize them on the Japanese candlesticks, you should have no problem. You should stop panicking. Mostly, I think what it is, like myself, when I first became a new trader, yes, you have that risk always in the back of your mind. But as you become a more confident trader and start recognizing patterns, and you see that repetitive, you become more relaxed, like crypto savvy. He's been at this for a couple of years. You go look at his channel. He seems to understand what's going on, and he'll even say it. He'll tell you there's other traders out there. You watch YouTube, they're running around, they're packed full of emotion. They got these, they want like recognition for being the guy who called the market when everybody else was wrong. They want to be the person that was right. Because they want those laurels on their head. They want that respect. They want to have, they want to be on that pedestal and shine. They mentally need the recognition. I don't need the recognition. I need the money. That's why you trade for. Let's be realistic. We want the money. So this is pretty simple when you look at this. You know, I mean, I worked on a brokerage floor, but I would just, follow the directives of what somebody told me. Buy me this, buy me that, sell it, buy it, sell me. So you don't have time to really pick it up. So I have picked up some stuff, but this is, I really didn't have no interest in trading. I just, the actual job of working on the trading floor was basically a service industry job. You're just typing in numbers into a dot system. But I did learn some stuff. I used to do penny stocks, and I made a lot of money off of penny stocks. I made a lot of money off where I used to find most of my stuff for the penny stocks was in the back of Popular Mechanics and Popular Science of what's new. You look in there, and Popular Science or Popular Mechanics gives a new product a good review, and if that company is public, its stock usually does quite well, and that's what I was working on. I shared that with one person that used to run a hardware store. He asked me, "Oh, you trade?" Yeah, I go, "Yeah, I work at Wall Street." And yes, his name was Phil. He owned a service store, um, hardware store on 30th Avenue in Astoria, Queens. Phil, if you're watching my videos, hello. Um, and I told him about one penny stock. I met his daughter, and he actually retired early. He goes, "Oh my God, that penny stock you gave me flew through the roof." He was so elated and happy. And I was glad that I helped somebody. It was a good feeling. It wasn't that I put myself on the pedestal. I didn't care how much money he made. I was just glad that I was able to make somebody happy. And that felt good to me. So I hope there's people out there who could understand that. And if you can't, you might want to see a psychiatrist. All right, people. So now I see my technical analysis is just about an ABC wave. And if you're lucky enough and you want to take the risk, you could probably ride at least one additional wave, you know, waiting for that C wave after you capped out at the old B wave. Now let's go in. What do I think is going to happen now? I think we bottomed out. There's a clear indicator. There's a nice green candlestick right here we haven't seen. Okay. The RSI is bottomed out. We're starting to swing up. And most people, the more experienced traders, they won't actually buy here. They'll buy here on the first green candlestick that confirms that we're on our way up. This is what I learned from the more experienced traders of crypto. Now remember, there's no school for crypto trading. Matter of fact, there's no school for trading, period. There'll be schools to teach you to prepare you for your Series 7, but that's about it. So now back to this. They'll buy within here. I myself, I would have put my trades in at the bottom of the A wave. Okay? See, 112. You buy in. Now you're going to go up from the bottom of this. I am estimating 9 blocks. Each block is $5, which is $45. Okay? Now each block, each successive upswing has always been 1 block higher than the last one. So this is my opinion now. So we're going to count from the bottom. 1, 2, 3, 4, 5, 6, 7, 8, 9. So this one's going to be 10. which is $50. So we're looking at 160. Now, a lot of people says if it breaks past that 160, you might want to be sitting here as you approach 160. If the upswing is strong, right, you have to be sitting here. But I would say if you're going to swing trade, put your order in 160. Don't worry if it goes up to 180. You still made profit. Do not feel any remorse. Again, that's your emotion. It's going to start overriding your common sense, and then you're going to start screwing up. But if you're sitting here and you see, wow, it's strong, it's still going up, it's going up fast. You see them buying, it's not slowing down. You're looking over here, and it's just green, 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 and it's going really fast. You're like, I think it's going to go past 160. We're at 155. It's going crazy. You cancel your sale, and you put it in for 180, and then when it hits, when you think it's going to tops out, then you sell it out. And then you can get your one smaller trade, swing trade in, and then you just put your, look where the bottom of the last A wave is, you put your buy in, and wait for it all over again. The only thing is that you hope that in a 30-day time frame, you hope you can make as many of these trades as possible. So in this case, this was a really long wait, 14 days to get a C wave. Over here, how many days? So 3 and 4, 7. Yeah, this one took a week. This one took 14 days. You see how it is? They seem to take 8, 7, 14. So even if you had $10,000 to start, let's say in a month-long period, let's see when June begins. You start trading June 1st. Let's just say you start trading June 1st. Let's go back to June 1st. Say if you entered the market June 1st. You know, if you're looking at this chart right now, we still have to go down to the C wave. So now you bought it over here. Say you started trading June 1st. Right? With $10,000, if you started June 1st and you follow the waves, you started trading June 1st, you bought in at 100. You had $10,000. Now you got 100 coin. You sold over here at 143. Just as of June 1st, if you're following the waves, you made 4,300, right? Now you learn from me. You say, okay, I'm going to take the 3 wave down, try to get 1 wave before the C wave after completion of the B wave, which you saw that. 1, 2, 3. 1, 2, 3. You bought in over here, following my 3rd wave analysis, and you bought in at, we'll say 130. Now you got 110 coin. Now you say we're going to go 2 waves up. 1, 2. And you sold out at 139. Now you just made 50% from June 1st. You now have 15,290. Now you're following the wave principle. You waited from here. You're waiting from here. So the wait's not that long then if you get at least 1 mini wave, right? Now you're stopped at June 15th. You're waiting for the C wave, the 27th. So you waited 12 days. Now you're selling over here. Well, you're buying in over here. You put your trade in at 112. Now you're sitting on 136 Litecoin. Now it goes up 10 blocks from here, which is $50, which is 161. You would now have around $22,000. Following those simple ABC waves with a small in-between trade, one smaller swing trade of when it goes down 3 blocks, you sell it at the price of $10 more. You wait till it decreases $15, and then when it goes back up $10, you sell off. Okay, a decrease of 15, sold at an increase of $10. You get one. You can manage one of those. You're fine. Don't do like I do. Ooh, I'm gonna ride another wave and ride another wave, and say, oh look, I'll just take advantage of these. I'll make smaller swing trades. I kept doing that and I messed myself up. But now I know this is it's okay, because now we hit the bottom of the C wave and we're gonna go back up, and I'm gonna make my money anyway. Now, how long you're going to be waiting? This is another thing I noticed that new traders don't have patience. Now look, now you're at the bottom of the C wave. How long is it going to take you to get your profit? Are you going to end up sitting here staring at the thing day by day? There's no need to. Count your blocks, set your sale, and just walk away. Put your stop loss into. So we got six days to get to the top. This one was 3 days. This one was 5 days. So you're looking at longer, as the market goes up, you're looking at longer periods between the A, B, and C waves. In this case, I think this was caused because the bulls were extra stronger. As the bull market becomes stronger, it's going to take longer time to get back to that C wave. But we will get to that C wave if you swing trade. And the rewards, the longer you wait, what's going to happen? The more money you're going to make. Because the percentage-wise of the retraction is going to be stronger in reaction to the strength of the upswing. You see, it happens with Bitcoin too. So that's my lesson of today from a fairly recent trader. I learned a lot from the other guys on the channels. Fortunately, there's a lot of clutter in there. When you're looking for trading tips on YouTube, I would say your best bet is to go to Crypto Savvy, because he's calm, he's cool, he takes his time, he's not trying to push a product. Everything he wants to give you is to help you. That's why he's giving it to you for free. Somebody that wants you to pay for their help is looking to help themselves, not you. So I recommend his channel, the Chart Guys channel, Crypto Savvy, the Chart Guys channel, and there's also another channel that I like, Crypto Capital Venture, and let's see if I can find it. You can hear my voice, right? Jim of All Trades. He's pretty good too, but he does. Jim of All Trades is a straight technical guy. That's where I learned the ABC wave was from him. I also learned that from Crypto Savvy, but I look at the better traders and I don't just magically adopt their techniques and follow them. I try to learn their technique, see if I can understand it, and then confirm it for myself, and then blend in my own perspective into it. That's how you're supposed to trade. You can't just follow somebody. They might be off that day. How do you know if they're not pissed off or over exuberant? You know, they might have made a good trade and they're over exuberant and say, oh, this market's going to keep going up. And that's when the emotion gets involved, and that's when you screw up. I'm guilty of the same thing. Well, there you go, people. I hope this helps you out. I honestly think that I'm going to be a much better trader this summer than I was last summer. But then that's, well, with the crash, I think that's going to be for everybody, to tell you the truth. But I'm saying now, I learned the signals for not to catch the falling knife the wrong way. Like, if you can't call the bottom and then you buy over here, you're going to look rather stupid. Though you'll still be able to make money, if you pay attention, you could make more. And doesn't your family deserve the best you can give them? So, all right, people, you have a good day. Good luck trading. I hope you find this stuff useful. Let's make some money.